Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with Rod Griffin. How you doing today, Rod?
Doing great, Kirk. How are you?
Doing great, doing great. So brought Rod on the show as we're into the holiday season. Wanted to get some insight here. So Rod, tell us a little bit about your background before we get into things.
Sure. I lead Experian's consumer education and advocacy programs in our corporate group. Been with the company 27 years. So when I started, now if you're seeing me in the image, I have lots of gray hair and didn't have that when I started, but I've learned a lot along the way. My role is about helping people understand what Experian is, what we do. Typically, we talk about credit reports and credit scores because that's what people know us for, but we're much more than that. As a company, we work in fraud and identity theft and prevention, detection, recovery. We have an automotive history business that competes with that one that we all kind of know from the commercials. Actually, the National Auto Dealer Association preferred provider. We have direct marketing businesses. We have um, all sorts of identity verification and information services. So we're the world's largest information services company. Kind of a
Nice.
long way around who we are, and people don't realize that. And so we touch their lives in a lot of ways. And I want people to understand that our goal is to help connect them with better financial health and better financial lives, and to help them have a brighter future.
Cool. So why'd you start working in this industry? What brought you
Yeah,
here?
so um, dumb luck in part. So sometimes we get lucky in some other things. My story, my background's journalism. I was a reporter, editor, photographer, press assistant, did all of that small kind of community papers, newspapers when we knew what those were in years past, and was actually moved to Texas from Kansas, and because of the job market, I was working for a municipal government in communications, and looking at the want ads for my stepdaughter, and saw this in the Dallas Morning News. Saw an ad said Experian wants somebody who can write education materials, and told my wife, hey, I could do that. And she said, send a resume. I said, you can have a government job, and it's the not great pay, but the benefits are fantastic. And she said, send a resume anyway. And so here I am 27 years later, and really found that it's an incredibly exciting industry to be in. It's, I ask people sometimes, what's the driver of global economies today? And, they'll say the dollar or the euro or the yen or Bitcoin. And my response is none of those are true. What really drives our economy, facilitates it, is information and data. And so understanding the power of information to help us as individuals improve our financial lives is kind of a passion. It has become a passion. I've been fortunate to
Nice.
be part of the industry ever since.
Cool.
So,
Yeah, I would agree with that. Information's definitely a driver and facilitates the modern economy, certainly more so than it used to be. I want to kind of dive in because your background, I want to dive in a little bit about credit scores. I mean, it was around the holidays. I've certainly noticed changes around the holidays. So I'm just curious, what should people be thinking about, or how should they be thinking about credit and their credit scores, especially this time of year?
yeah, this time of year, we're all spending this time of year. We want to buy the best gifts, and uh, it's challenging because we're tempted to overspend. And that's our research shows that about 30% of people tell us they're stressed about spending. And I say, well, the other 70% are in denial because I think we all get a bit stressed. The message I try to really share is credit's a financial tool, debt's the financial problem. If you're using credit as a financial tool along with cash, it can help you be more successful, and be sure that you don't overspend. At this time of year, having good credit scores can help you qualify for better terms or better rates if you're planning to make a major purchase. If you're thinking about applying for a new credit card, same thing's true. You may be able to get a lower rate That's going to help save you money, or discounts on purchases. So think about using credit as a tool to help with the overall financial decisions you're making. From there, with the holiday season, I think it's the same things we often talk about. It's about planning, preparing. I always tell people, be like Santa Claus, not like literally like me taking it too seriously, like getting more round in the middle and the gray beard, but use a list, check it twice, make sure that you're not susceptible to the temptations of the sale signs quite so much, and avoid impulse buying. But improving scores in credit scores is going to help you save money in the long term.
So I want to ask some questions about credit scores because I'm curious. Um, you know, I know there's this kind of back and forth about it because if you don't use credit at all, it negatively impacts you. If you use it a lot, too much, and it negatively impacts you. So it's almost as if the credit scores are designed to keep you using credit cards or debt, as opposed to being responsible, not using debt at all. So how does that work? What are kind of best practices people should be thinking about with keeping a strong credit score?
Yeah. So, scores are what scores really do is help lenders determine the risk of default. So, are you managing credit in a way that says I'll be able to pay those bills on time, or are you doing things that indicate risk that you won't be able to pay the bill? So the scores certainly aren't designed to keep you in debt. That's not the intent. What you need to do is really pretty straightforward. You have to be consistent in the way you make purchases and pay your bills in particular. You have to pay your bills on time every single time, and keep your credit card balances as possible. If you can pay them in full, that's ideal. You don't have to carry a balance, and that's a common myth that you should only pay 10% of your or 20 pay 90% of your bill so that you have activity and show a balance in your credit report. That's the worst advice available, because all that does is mean you're going to pay interest on that remaining balance. You'll still see a balance because the balance on the credit report's typically what's in your billing statement. So if you paid it in full. So you should really think of your credit report, credit scores as a financial tool. If you get a credit score, and you can get free scores lots of places, make sure you get not only the number, but the list of what we call risk factors that go with it. Those risk factors will tell you what from your credit report you need to work on to make sure that you have good scores, and it can get the credit you need. So numbers nice to know. Take care of your credit reports. You only have three. You can get them free under federal law once a year. Actually, at annualcreditreport.com, we will provide one from the bureaus free once a week. So you can get your report, know what's there. But scores are the things I'll put it this way: the scores look at essentially 4 or 5 things. One, your payment history. Are you paying the bills on time every single time? Or are you late? If you're late, how late are you? They're looking at your utilization rate, which is your balance to limit ratio on your credit cards. So the higher that balances are compared to your limits, the lower your scores are going to be. So you need to keep those down. And then they look at the mix of credit over time. What kinds of accounts do you have? What sort of mix of credit do you use? And how long have you had it? They're going to look at your current or recent behavior. So have you applied for new credit? Have you paid things off? Have you taken on more debt? So if you're paying your bills on time and you're keeping your balances low on your credit cards, everything else builds organically. Your credit scores, and especially this time of year during the holidays, it's really about two things: pay the bills on time, keep your balances low, and be consistent. And that's true, with scores perpetually. If you're doing those two things, you'll have good scores. There's no real secret or big secret about them.
Okay, cool. Well, one other thing that's come up, I know last year I had some gift cards and they all got locked down around the holidays. I couldn't use them online, couldn't use them anywhere. We basically use them at a restaurant, but that was about it. And I know around the holidays people get, I'm sure there's a lot of fraud going on around the holidays. You can get away with stuff because everyone's buying. Um, so I wonder, like, what should people be thinking about in terms of fraud prevention? How can they protect themselves from being susceptible to identity theft or any of these other things that happen to people.
Yes, you're right. Holidays are key shopping season for us, and they're prime shopping season for fraudsters too. There are several things you can do. One, if your gift cards don't affect credit reports, so that's essentially a cash transaction. So there's not much you can do there. But if you're shopping during the holidays, think about using a credit card, for example, to make purchases because there are limits under the law with regard to fraud losses. So there's some protection there. And there's a bit more security in the way that the transaction occurs. So if you use a credit card or credit cards to make all of your purchases and then pay the balances in full, kind of goes back to what we're talking about credit being a tool, debt's the problem. So if you can do that, gives you some additional protection. Monitor your credit history. There are lots of free services out there, and you can get alerts with what's happening in your credit report, so you'll know right away if something's hit the report that could indicate fraud. So use your credit reports as a financial tool, and as a tool to protect you. Check your billing statements, whether they're online or you still get a paper statement. Make sure you're reviewing them, watching them closely. Things like check your receipts, because sometimes you'll see additional charges or things that shouldn't be there. If you're getting fuel when you're traveling, check the slot. If you're sliding your chip card in, make sure that it's a legit reader and not a skimmer that they can essentially stick over the top and capture your card information. So be cautious about actual physical things that you would see. If you can, make sure that if you're using your card, if you're in a restaurant or somewhere, keep your eyes on that card if it does, and make sure it doesn't walk away if that's possible. In some cases, it's not, but you'll know then that it's being utilized safely and not going off somewhere and getting scanned or skimmed and then being used in nefarious ways. So the kind of basic steps that you can use.
Okay, cool. Since you're into the data aspects of this, I'm curious, are there any surprising trends in spending or credit scores or defaults or like what are you seeing in trends lately with the consumer public?
Yeah. Credit card balances are increasing, and that's a bit concerning. We're seeing record high balances on credit cards. The good news is we're not seeing the same thing happen with delinquencies, late payments. We're not seeing them go up at the same kind of rate. So they're still pretty safe. Maybe safe is not the right word, but they're not alarming in terms of delinquencies. But that's still a concern. We're also hearing from people that maybe not a trend, maybe it's a long-term trend, that they're concerned about inflation. They're concerned about the cost for goods. And so they're looking at their budgets. They're still spending more, but budgets seem to be a bit more flexible upward in some cases. They set a budget and they tell us that they'll likely still spend more than their budget had specified. And so that can be a bit concerning. So I think those are kind of the key issues. If we're watching credit card debt increase, that's a concern for me, because that's kind of a telltale of potential issues in the future.
One thing I've been curious about, I had credit cards since I was 15, never had an issue. There were times, I think it was prior to the housing crash, where, I was pushing the envelope. Let's see how low I can get my rates, just calling them all the time. Hey, give me low rates. And I was convinced I got the lowest rate that is possible. And I have good credit. So I, I, I've found that one company in particular has really low rates, but one big name has actually really high rates in comparison, which I always found odd. But in the last few years, I've noticed that high rate is skyrocketed up to like I forget what it is now, like 24 or 29.99%. And I've got good credit. Now, on the other hand, the other one, which was normally like 6 or 7, is now up to 10. I'm like, okay, I get that. That seems reasonable. This other one's like 30%. And I have good credit. I can't imagine what people with bad credit are paying. Of course, I'm not carrying a balance on that. That's ridiculous. But it makes me wonder about the people who are carrying a balance. Like, how are people dealing with this increase in rates? And it's not a commensurate with interest rates. It's a through the roof skyrocketing from like 12% all the way up to 30%. Um, and their argument is, well, we have to make money too when I call them on it. But I mean, they're gouging people and no one's calling them on it. So what is going on with everybody else? Like, is people just saying, oh, well, I guess I have to pay 30%? It just seems crazy.
Yeah, you touch on a good point. If you have a strong credit history, you have buying power. And so you have the flexibility to challenge providers to say, look, I can go somewhere else. And that's something we want people to understand. That goes back to the whole conversation around credit's a financial tool. If you're using it well, you'll know exactly what they're going to see, and gives you the ability to shop. Lenders set their rates based on their own criteria. As Experian, we don't have any influence in that. So each lender determines who their particular customers are. There are lenders who provide or whose customers are primarily prime borrowers, have really good scores, typically have better rates. There are others who work in subprime customer sort of relationships. They tend to have higher rates because it offsets their risk. So they may see higher default rates. And so that's part of their consideration. And that's why if you use your credit history well, you can go to other lenders and help find the best rates for you. Another thing that's important to know is if you don't get the best rates, they have to tell you today. So if you apply and you get a worse rate than their best rate, they have to send what's called an adverse action notice, and they have to tell you that, and then tell you why you didn't get the best rate. So it gives you some more information to work from. So, what are your score? What scores did they use? What are the factors affecting the scores, or what went into their decision? So, as a consumer, we have more again, information is key, and more information available than we used to.
Nice. Well, cool. Well, Rod, I appreciate you coming to the show and sharing your wisdom with us. Where can people find more about you?
Yeah, so check us out at Experian.com. We actually have a marketplace for people if you're looking for better insurance rates. We actually work with 40 of the largest insurance providers in the country. And we're finding people are telling us on average they save about $800 a year on their auto insurance when they work through our marketplace. And that the other benefits we monitor for you. People tell us they hate to shop for insurance. So we can help monitor rates. If we find a better rate, we'll tell you. And that way you can change if you choose to save significant money. We also have a credit card marketplace. If you're looking for better terms and better rates, we can help match based on what you tell us you're looking for. And we have a new service called No Ding Decline. So if you see a card that has that indicator on it, it means that if you apply and you don't get approved, it's not going to affect your credit scores. So we can help you not have that stress, as you mentioned earlier, about applying and worrying about hurting your credit history. So check your credit report, monitor. Again, if you go to Experian.com, we have monitoring services that will help protect you from fraud and identity theft, or at least alert you to potential fraud. So Experian.com is the place to go, I guess.
Awesome. Well, thanks, Rod. I appreciate you coming to the show and sharing your wisdom with us. Good luck with the holiday season.
Great. Thank you, Kurt. You too. Take care.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider or in the room, as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room. All right, well, that was a great interview with Rod. Really appreciated him coming on the show and sharing his wisdom with us. Now we're into the panel portion of the show where you have our very own Barb Friedberg. Hey, Barb.
Hi, happy to be here and talk credit.
Great. Well, glad to have you here. And we also have our very own Phil Weiss. Hey, Phil.
Hey, Kirk, I'm happy to be here as well. Looking forward to an interesting discussion, something we haven't talked about much.
Yeah. Yeah, we wanted to bring Rod on because, like you said, we haven't talked about this that much. We still do personal finance on the show. We just haven't done as much of it because that's not what people are asking for. But I feel like it still needs to be done. So, Barb, what were some of your takeaways from the interview?
Well, I loved hearing from the Experian guy because for some reason they love me. I get emails from them every single day. I think on one of the credit breaches, you know how your name gets out there and somehow somebody stole all your details. They give you a free year of credit monitoring. So I signed up for that and now I'm like this with Experian. And I think it's a really important topic. Debt, how do you get your credit score up? Why it's important, how to get away from crippling debt, and really how to manage your bills and create a budget so that you're not always in debt. So those are some of my takeaways.
Okay, cool. Phil, what about you? What are some of your takeaways?
So I think a lot of them are similar to what Barb said, but one of the things that I started to think about as she talked about like my own experience with this, because I'll tell you that I put myself through my last 2 years of college using credit cards. I paid for tuition, I paid for rent with the credit card checks. Like I would never do that now, but to me it was good debt because it got me through school. And then when I finished school, I looked and said, oh my God, I can't afford to pay all the interest that I'm paying on these cards. And I put in place a plan, which ended up being one of the plans that you read about now to get rid of it. But I didn't have that guidance because there wasn't an internet to go look for, like, how do you do this? But it's just as I think about how it's evolved, how I use credit and how I talk to people about credit has evolved a lot in my life. So it's a really important topic. And it's something that, sometimes you get people that come to us that have a lot of credit card debt, and sometimes you have people that use it very responsibly and just pay it off every month. So there's just the whole gamut in terms of how people deal with this. So it's a really good topic.
Yeah. Cool. So Barb, I know before the show we were talking about the kind of perception of credit, but a lot of people, a lot of different people have different perceptions in credit, and some of it's based on, their generational ties and influences. So, kind of, what are your thoughts on all that? Like, how are different people thinking about it, and how should they be thinking about it?
Well, you can use credit for literally everything today. That's quite different from in the past, where credit cards were not as prevalent and you couldn't pay for everything with credit. Now, my belief is that there's certain things that will really help you get ahead in the future. Things such as, maybe college Maybe owning a home, or if not, help you get ahead, will give you a certain financial security. Having a car, cars are so expensive today, you might need debt for that. So those three realms are areas that I would say it's probably not a bad idea to have debt. But everything else, whatever you can do to avoid it, you really will hurt yourself if you have high yield credit card. And when I say high yield or high rate credit card debt, I mean you can get a home loan for less than 6%. I don't know what a college loan is today, but they're typically lower. Car loans, you can usually get a deal on those as well. Although my belief for a car is if you can't afford a car, buy a used car and, pay for most of it if you can, and then just borrow a tiny amount. Because if you're paying on credit card debt, say 20%, 15% on your credit card, and you're contributing also to your 401k at work, and maybe you're averaging 7, 10% return. If you match those two amounts, you're earning 7 to 10% on that amount of contribution to your 401k, but you are paying 15% on your debt. You're losing 5%. You cannot get ahead that way. So there's two facets. One is keep your debt as low as you can. Number two is really get rid of high yield credit card debt because it will hurt you now and later.
Yeah, I think that's a good point. Phil, what about you? What are your thoughts on the perception of credit in different generations? Like our youth or even people of our age. What are your thoughts?
I think it's a really important thing, and different people think very differently about it. As we were talking before the show, one of my sons said to me, credit cards are bad because he's heard too many stories about people that are in have too much credit card debt. And we had a conversation about how to use it responsibly. So now he does have a credit card and he gets his bill and he pays it in full. So he's not paying that interest. So the interest rate on the card really doesn't matter as long as you pay it in full. And I said, look, if you pay your card in full, if you get a card that gives you some benefits for using it and things like that, it can help you. It also helps you having a high credit card score. I mean, a high credit score matters for things like your mortgage. You get the better your credit is, that can give you a better mortgage rate. When you're getting a car, you can get a better mortgage rate if you have a better credit rating. Your insurance, they can look at your credit rating and your cost of your insurance can also be impacted. So there's ways that it can help you. You have to be careful. And Barb talked about high interest credit card debt. Think about it. If you owed $1,000 and you kept that balance all year long and you were paying 20%, that means you're paying $200 a year just in interest to carry that $1,000. That doesn't really make sense because that pay the $1,000 off, pay it off, and then you don't pay that. And that just gives you more money for other things. You want to use it responsibly. I have a client that said, well, I got this card because they gave me like an incentive. I saved a few cents on gas every time you put gas in. He said, now I owe all this money on the card. So you defeated the purpose of saving the few pennies on gas because you use the card so much that now you're paying interest. So you've lost that benefit. So you want to think about that. You you want to do your best. I mean, I know there can always be times, and credit can be there for you in a difficult time, but you want to do your best to pay it in full every month and use it responsibly. And I just want to add one clarification on something that Barb did say about your 401k. If you get a company match, and let's say that the typical match is you put in 6% and you get 3%. Even if you had credit card debt, I would still get enough to put that company match in, enough in to get that company match. Because if I put in 6% and they give me 3, that's a 50% return right there. So that does beat the rate on the credit card. So I always try to counsel people that always take that match. And plus, when the company decided how much they were going to pay you, they assumed that you were going to take that. So they counted it in. So you're really probably getting less pay because they assume you're going to take that match. So that's the one exception. But in general, that premise is right. When you want to think about how much are you earning on your investment and what are you paying in interest? If the interest rate's higher than whatever you're earning, pay off the debt instead of putting the money into savings because you'll save. Go back to my example, you save $200 on that $1,000 credit balance if you just paid it off.
Yeah, it's a great perspective. It's funny some of the things you guys have said. I want to bring this framework to credit and debt because I think it's really important. Is that credit or credit cards are basically crack cocaine for kids, and when they came out, it was really easy to use. You give them to these college kids, and they max them out, and then they spend the rest of college trying to pay them down. Um, and I think what a lot of people don't realize, and this is the lesson you need to really give the young kids, is you're pulling forward future earnings today. So it's the Popeye thing with Wimpy. I'll pay you Tuesday for a hamburger today. And I think the probably nobody except for Barb and Phil, no one else is going to remember that reference, but it was a big reference back in the day with Popeye cartoons. Um, but anyway, so I think if you think about it that way, it puts things in perspective because it's really hard. It's like, oh, I'll just pay on this credit card and then I'll deal with it later. I don't have to worry about later because later's tomorrow. I'll just, live my life today. And then tomorrow comes, you're like, oh crap, now I got to deal with this for the next like year. And I think one of the challenging things is that you're giving a little kid a loaded weapon because they don't know how to use it responsibly. One thing my dad did when I was younger, and I used to buy stuff from catalogs, look through the catalogs. I'm like, oh, it's really cool, and I go buy something, and back then you had two options. You could pay via credit card, or you could send a check. This is really far back. You could send a check, and I was like, yeah, but if I send a check, it's going to take like 2 more weeks. I want it now. And so my dad made a deal with me. He said, all right, if you pay me the cash now, I will allow you to use the credit card, but you have to pay me first before you use it. And I said, okay, that's fair. Um, and then I got instant gratification, which is probably not the right lesson, but either way, it still is a reasonable lesson. I got instant gratification. I still had to wait for them to deliver, which was still a week or two anyway. But at least, I was able to solve that problem. Now, your only option is to pay in a credit card. And if I go online, it's like, well, you can pay via credit card or you can pay via some of these cash apps, which I guess is kind of similar to cash, but I don't know. You can't do that with all of them. Some of them are PayPal. I don't know. What do you think, Barbara? Have you ever looked into this? What all the apps are and how they work? Because I know how Venmo works, but I don't know about all these others that are up there.
Well, I'm familiar with PayPal. I'm familiar with Venmo, Zelle, whatever. And the key that whatever you're doing, look at what your fee is. And that's a key because with a credit card, the seller pays the fee. The only charge you will have is if you have an annual fee credit card, which is no damn good, or if you don't pay your balance off in full, which is also not a good idea. I don't know if some of the other apps have fees or not, so I'm no help.
Yeah, I'm curious. Like, how does Venmo make any money? Are they just making it on the float? Because they're not charging me.
They may be selling the company.
Oh,
I
selling
don't
the
know.
data.
I I don't
Yeah.
know.
Yeah, I always
I'm
wondered.
known for chiming in on things I know nothing about, so
That's why we have you in the show,
definitely
Barb.
cut me off here.
I can add a little, at least on the business side, if you're a business and you offer Venmo, because I looked into this for my business, and they charge a fee for a business to collect. So actually, for my business, I use Zelle because Zelle, my bank didn't charge me, and I didn't want to pay the fee. So if I have somebody that sends me money that way, they send me it through Zelle, and I won't use Venmo because there's a fee. So I know that they charge, so the business must be paying.
Okay. Yeah. So if you're paying it that way, but do stores allow you to pay via those cash apps? Like I don't know. Like I just bought a bunch of stuff and I know that they usually have credit card or debit or sometimes they have these carve outs for certain like I forget what they're all called, but they've got some other carve outs. But I'm just curious. I mean, to me it just seems like there aren't enough options to pay with cash. Like you go into a Target and you give them cash and they look at you like you got three heads. They're like, what the hell is this? I'm like, I know it's monopoly money, but please use it. You know, like it's going to be worthless in a few years anyway. But it's still it to me it just seems interesting that the whole culture has revolved around credit now, even if it's responsibly used. So how do you instruct how do you instruct the youth or even adults? And I guess you can't really. I was listening to this podcast, and the guy keeps talking about you can't teach adults, and that's probably mostly true. But how do you teach kids to responsibly use credit when credit is really your only option for most things? I mean, what do you think, Phil?
So it gets back to the idea of budgeting and knowing where your money is going in and thinking about what you're spending your money on and how much is coming in and how much is going out. And I know I talk about this with my kids, and they understand the idea that we have X, and like they'll keep track of their, what they're putting on their card so that they know that they have enough to pay it because they know the downside of not paying the balance in full. So I think education is probably the key element.
Okay. So, um, Barb, I know you've probably dealt with a lot of this over the years, but what are some tips and tricks people can think about to use for responsible credit or ways that people can kind of take advantage of the system without being on the short end of the stick?
Well, it all starts, first of all, from knowing how much you're spending, because you need to have a sense of tracking your expenses and balancing that off with your income. And hopefully your expenses are less than your income. I mean, that's the key. If they're not, then you need to make a really, really big effort to get your expenses down or increase your income. Because otherwise, you will never get ahead. So, tips and tricks: pay off your credit card in full every single month. I had someone tell me once about their Christmas shopping, and she was complaining, I've got so many brothers and sisters and blah, blah, blah. I said, why don't you just get them small gifts? And she said, well, that's not the way we do it in my family. And I said, well, can you afford to get them big gifts? You're in graduate school now. You don't have a job. And I said, you have to make a choice. So that's number one, two, and three. Number four is if you're at a point where you've got your spending under control, you're paying off your credit card debt every month, and you want to game the system a little, well, um, I don't advise really getting multiple credit cards because I think that confuses your life. But what I do advise is if you're responsible enough to pay your card off in full, for example, I have one credit card that pays me 1% when I spend and 1% when I pay my bill. So I, in essence, get $2 back for every 100 bucks I spend. And I pretty much charge everything on that card because why not? I'm getting a 2% discount. And then I shop a lot at Target, and they give you a 5% discount. Now, many people also shop a lot on Amazon, and their card gives you a 5% discount as well. So if you can trust yourself to pay off your bill every month, you can search out the cards with really good benefits. I know my Macy's card as well. I earn a lot of cash back on that. But you mess up and you're in trouble. I'll give you an example. For some reason, Target said I didn't pay my bill on time. I don't know how that happened. And so they sent me one of these past due notices. Now, it wasn't true. I am paying my bill on time. And I saw my credit score immediately drop like over 100 points. Now, I don't care. I'm not borrowing any money. I don't need a good credit score, even though I have, among the top credit scores there are. And so I had two choices. I could call the company back and say, take this off, this is wrong. But I'm lazy. I paid the bill off and my credit score went back up, which, I don't know what really happened there. But for someone whose credit score really matters, someone who's younger, who needs access to, the benefits of having a credit score, that can be a problem. So, to sum up my long-winded answer, if you can trust yourself to pay off your cards, then go for cards that'll give you a little extra benefit.
Yeah, no, that's a good tip. That's a good tip. Phil, what about you?
I'm just going to add one other thing, Barb, in that situation. 'Cause, like, I pay all mine too, but occasionally, like, something happens and it didn't get there or whatever. You can call the company. Like, I'll call the credit card company. I'll say, hey, look at my record. I pay every month in full. I missed this one time. Please take this away, and they will remove it. So don't just give in either.
Right, right. And
A
I
great
knew
tip.
that. And I'm like, I'm not wasting. I mean, this is not advice for anyone else because very few people are that are listening are probably both in my age range and, really don't need a credit score because, they just are not going to use it. Listen to Phil, don't listen to me.
That's good
And,
advice, Phil.
and the other thing too, there's lots of free services. I know I get emails from multiple ones now. I didn't even ask for all of them, but they tell me what my credit score is, and I'm not that I care because, like Barb, I'm not in a situation where I need to borrow right now. But it's just a way to stay on top of things so that if something does happen, there's so many people there's so many security breaches and everything else these days. Staying on top of it by getting those weekly emails and just checking in to see what your score is and see if it changed so that if something happens and you can act quickly. It's a lot better if you can act quickly than if it kind of mushrooms and gets worse.
And actually, I have to bring something up because I subscribe to Norton LifeLock, which is a little bit, not to bash the company, which is a little bit annoying because they tell me every time my information is out there. So I'm like, oh, great, another credit breach. And literally, it happens not more than once a month. And you know what the fix is? Really, the fix is on me. So, what I have done per their recommendations is I have locked all my credit. So you just call or you do it online actually, and you shut down all your credit so no one can open any credit in your name. And that's the protection because I don't know about you, but my information is out there and it keeps getting out there. And I don't think there's any way to stop it. And the only way I can see to protect myself is to make sure no one can open credit in my name at any of the three credit bureaus. And you can do this every year just to make sure. And then if you need to reopen it, you just go back to the website and you click a button and you can turn it back on.
I've done the exact same thing, Barb, because I got one of those and they said that my information was in a breach. I'm like, okay, I'll just freeze everything. And then if I need credit, like you said, it's really easy to turn it back on. But since I froze it, I haven't needed it. So it's just stayed frozen.
Yeah, it's funny. You guys stole mine. It was going to be my tip. Back when I think it was Equifax is the one that got the big breach like 10 years ago, where they stole all like hundreds of millions of people information. I think it was Equifax. If not, I apologize, Equifax, but I'm pretty sure they're the one. Um, and what was interesting was after that, I had locked all of my I went to all three credit bureaus and I froze them. And the process is relatively easy. It's free, by the way. So a lot of these companies, all three companies will have some service. If you look on their site, it will actually prompt you to pay to freeze your credit. You don't have to pay. It's free. They have a service, and I don't know why you would pay the $20 a month or whatever it is, and they're just trying to make money off you. But it's free to freeze. Um, and you can set up an account and you can get it frozen. Now, what I've done is I did the same thing. So after I think it was Equifax got all of their data stolen, I froze that and I just went and froze the other ones. It was really easy to do. I mean, it took me a few minutes to figure out and to navigate the sites, but once you set up an account, you get it frozen, it's really easy. Now, they make it really hard to find to unfreeze, in my opinion, because there's just the way they want to make it, they want you to pay the money. But you can do it. Like I said, it's free. The only, the one thing which I find hilarious, so TransUnion and Experian, and by the way, we didn't mention this. TransUnion, Equifax, and Experian are the three credit bureaus. But so I was looking for a house this summer, and I was like, all right, I gotta, unfreeze my credit, give it to the banker, and all that. And I was able to unfreeze all three. I'm sorry, for two of them, but the one I couldn't unfreeze was the one that was the culprit to begin with, which was Equifax. And so I got this big error that says you can't unfreeze, you must call this number. So I call this number. I couldn't get anybody on the phone. So I can't unfreeze the damn credit report because the website's broken and they give me a phone number that's broken and no one's picking up the phone. So typical for the company that also was bad enough to get their data stolen. So kudos to them for having a really terrible business model. But when you're going for a house, you need all three credit bureaus, not just one. I will point out, though, that what you can do is they also have, I think all three have this, which if you unfreeze your credit, which reasonably now you have to go back and freeze it after, right? And that's a really pain in the butt. So what I believe all three have is they allow you to unfreeze it for a very specific number of days. So you could say today's December 1st. I want to have it unfrozen until December 7th when so they can do all their work. You can do that. In December 7th, it'll be locked or frozen again. And you don't have to go back in and do it. So it saves you a lot of time. And it's relying upon them to pull it within that time period. But I can tell you that it is, if you're paying for a service that does this, don't. Do it yourself. Spend the 20 minutes it takes to do all three. You never have to worry about it again. Um, People can't steal your credit when it's frozen. They can probably steal your credit card numbers and they can steal your social security number if the credit bureau gets hacked, but they can't open up new credit under your name if all three are frozen. Unless, of course, they hack into your account, which, when you centralize all the information is probably bad to
And
begin with.
another tip is keep on top of your accounts. In other words, check your banking statements, check your credit card statements regularly. And I mean at least weekly to make sure there are no charges that you don't recognize. Because that's another way to track if someone has somehow gotten a hold of your card. And if you find something, first of all, with a credit card, you can dispute it. And I have never had a problem disputing a charge, and your liability is limited. But that's another reason why you may want to stream down the number of credit cards you have because it just makes your life simpler.
Yeah, I agree. That's a great tip, Barb. You should always check your reports. I believe if you use a credit card, you're not responsible for fraudulent charges for, I think, 60 days. It's either 60 or 90. So as long as you catch it within that period, you're not responsible for it. You just, as Barb said, you just dispute it. You just say, I didn't do this, and then they take care of it. It comes off your credit card, it comes off your credit report. You don't have to worry about it unless they find out you did it, which case they'll put it back on. But they will do all the research. You don't have to do anything. You just say, this is not mine. You deal with it. And you're completely absolved as long as it's obviously not you. Um, Now, that's for credit. Credit cards are the best for this because they absolve you of responsibility if it's fraudulent. Now, if it's a debit card, it's a little bit harder to get your money back because it's basically they're pulling money from your bank account. So I always advise if you're looking at debit cards and credit cards, always use a credit card because it limits your responsibility to what you actually do and it never pulls from your bank account. Whereas a debit card pulls from your bank account. So if somebody gets a hold of it, they can steal $100,000 out of there, assuming that that's somehow allowed. And then now you got to fight with the bank to get it back. And that's a lot harder. Not saying you can't get it back, but it could take you months before you get that money back because now you got to fight with the bank. You don't have this automatic absolution of your responsibilities. Now you've got to prove it. They have to get it back, and now it's a big fight. My wife loves using a debit card. I will never use a debit card. we battle about this. I'm like, hey, it's your money. You do it if you want, but you should be using a credit card. But reality is that the hard part is when you're using debit cards, it's a more responsible thing because it's not credit. You're paying with cash that you have. The problem is you're not protected as much. So you have to make sure, which system's better. So like we gave our kids green light cards, I think they're called. So it's basically like a mini debit card that they can go around and use, and they're like 12 and 14. So it's really a bad idea that I'm already giving them crack at that age. But the reality is they have to spend money, and what are they going to do? Carrying a wad of cash? I mean, a burger costs like $50 now, so like you got to carry around all this cash. Like I don't know how you deal with it otherwise, but it's a good short-term solution. We don't put a lot of cash there. We give them like $20 or something so they can go use it. But yeah, I think you have to go find all these little tips and tricks and really help protect yourself, protect your credit from fraudsters, which I will say just from secondhand knowledge, I have a friend who works for one of the security companies that work with banks, and they say they get hacked all the time. They said we don't even. They're supposed to disclose it. He's like, you don't even see most of the stuff that happens because it doesn't go disclosed. It's some of them are huge. They just don't disclose it because for whatever reason you don't want to mistrust the banks. But yeah, it's crazy the amount of stuff that goes on, and it's getting worse. So you gotta do whatever you can to protect your credit, protect your assets, and always put in barriers. And I'll just leave this point and then we can kind of do final thoughts and wrap it up. One other thing to think about with banks is a lot of people will put their bills where it's an auto draw. So it's a debit from your account. So like let's say you've got a cell phone and they auto debit your account. You guys can disagree with me. I never, ever, ever allow that. I don't care if I'm getting a 20% discount. I never allow anybody to auto debit my account. And here's why. Because if they screw up, and by the way, big companies screw up all the time, and it's never in your favor, it's always in their favor. So I this literally, I think it's planned ignorance now. Like all these mistakes happen all over the place. It's almost like it's planned. I'm not saying it is, but it's a little too calculated to be accidental, and it's always in their favor, never in mine. So I never let them do that because if they make a mistake, instead of pulling $75, they pull $7,500. I got to fight with them. That money's gone. I got to fight with them to get it back. And they'll say, well, you authorized this, and back and forth and back and forth. And meanwhile, I'm out the money. Well, I got to spend my time to fight with them to get it back. Never. I will always push money. I will never allow anyone to pull money. If I allow them to pull money, I do have an account, and I call it a shell account. It's basically filled with money that is designated to a place. So if I'm paying a check, $75 check, I put $75 in that account. So if somebody robs it, I'm out $75, whatever, right? And I can go fight with the bank over $75. But I don't connect it to my savings account or my big checking account. I always segment it. So if somebody pulls, they can't pull more than is already segmented there. And certainly, if somebody were to get in there, there's not much there to begin with. So it's a way to put a wall up from the public to your stuff because nowadays everyone's looking for convenience and they're doing this like debit pulls. And I know some people require it. My kid's school requires it. And I called the CFO and I said, I won't do this. And she's like, okay, we'll do it this way. Okay. I asked. All I did was ask. I said, I will not allow anyone to pull from my accounts. What can you do for me? Well, you just have to send a check in every month. Great. That's what I would have done anyway. Auto bill pay, sets it up, goes in there. She knows me. Like we've talked about it. She's like, I'm cool with this. Just send it here. As long as everything's on time, we're good. Usually, like if you're ever late, I got to have it pulled. I said, that's fine. We'll figure that out because it's auto bill pay, so I don't have to worry about it. But the point is it's being pushed. So if you don't allow people to pull, then you're not going to get in trouble as long as you push it out. So final thoughts here as we wrap it up, Barb.
That was really interesting. I don't know if I disagree with you or not. I mean, in theory, I think you're right. I have some auto pays, and actually, as an example, I just bought a new iPhone, and I do have my AT&T, which is my provider. um, on auto pay, and they charged me like a $30 setup fee, and I noticed my bill was $30 more expensive. So I had to go back, and I don't remember if I did this by phone or by online, but I said, "What is this for?" I never agreed to this. And they said, "Oh, it's a mistake. We'll reverse it." They reversed it. They credited my bill, whatever. But I think that's an example of what you're talking about. So pros and cons, I have about half my bills on auto pay. It's very easy. But I think what you said, Kirk, is a very big, it's a legitimate risk. And I'm confident that if the other party does make a mistake, they'll correct it. But that might cause you additional work. Now, another reason to pay your bills yourself and not give anyone access to auto debit your account is because then you're cognizant. You know what you're spending, you're looking at it every month. So I implore all of you, don't shy away from looking at your day-to-day finances. Keep track of your expenses, keep track of your income, and do everything you can to avoid unwanted interest and extra fees and charges. My name is Barbara Friedberg. You can find me at Barbara Friedberg Personal Finance and on YouTube. Bye.
Thanks for coming on, Barb. Phil, final thoughts from you.
So I thought those comments that you had were interesting, Kirk, too. I will tell you that I never let them do auto debits from my checking account, but I do pay for certain bills where I let them go to my credit card account because my view is we talked about before the protection that a credit card gives you. I know if something's wrong, I can always go to the credit card company if I don't have success in getting it fixed. So that's kind of how I handle this. Like I use Verizon, and Verizon debits my credit card every month to pay that bill. But I don't, even though it's an option, like I pay all my bills from my checking account, but I do them all myself. Because also I move my money around and I don't want to leave it just sitting there. And what if a bigger bill came and couldn't cover? Like it just takes the risk out of the equation. You talked about the debit cards. I talk about that with clients all the time, that there's just not as much protection. I'll tell you that when my kids were really little, I went into Sam's Club and my credit card was stolen. And it was a card that I only had because I went to Sam's Club. And whoever stole it took it up to the max. And I found out, and I called the company. I'm like, "Oh, well, we'll just wipe off the charges." But I was so upset that I actually reached out to the police and reported it. And I happened to have known one of the guys from the police, one of the policemen that looked into it. And he told me exactly what happened because they had it on video and everything else, like how it all occurred. And she got in trouble, but the credit card company actually didn't even care. Like, okay, we'll just take this away because it wasn't you. When they understood that it wasn't me based upon the volume and the activity level, it wasn't right. But it's nice to know that the credit card companies do give you that protection. Yeah. But this area that we're talking about, personal finance, it really is an important one. It's at the core of what we do as advisors, right? It's because in order to be able to get to that financial plan and that retirement, you have to start with knowing what you earn and what you spend. That's really the beginning, and you want to spend responsibly. And so if you have a credit card, you want to make sure that you use it responsibly too. You know, as for me, I know that experiencing big life transitions can be stressful. My job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm's Apprise Wealth Management. We'd love to get to know you. If you're facing a new beginning, you can take our Flourish Through Life's Big Changes assessment at apprisewealth.com/assessment to discover how ready you are to embrace and thrive through your significant life transition. You can also sign up for our blog. Thanks for having me today, Kirk. Enjoy the conversation.
Yeah, thanks for coming on, Phil. Thank you both. And yeah, just as a roundup for my comments, as Phil mentioned, I do allow them to auto pull for credit cards because a lot of the monthly services require that. And it is good to have your nose in the financials every month so you don't miss stuff and you get to catch mistakes. And anyone who's got an HSA account knows what a pain in the butt it is. But yet there were so many mistakes that happen on the medical side, and I fight with people constantly. It's like a second job for me. Uh, so, but I have to keep track of all that because it's required by the government that if I'm going to take an expense, I need to keep it. So I keep track of all that stuff for a later time. And frankly, it's a pain. But if it wasn't for that, I'd be overpaying for so many things because they just send you bills and you just keep paying them, and mistakes happen all the time, and you won't catch them if you're not paying attention. And if you get that much money where you don't care, then we probably want to talk to you because you could really use our help. But realistically, you just want to make sure that you're mindful of what's going on and you're paying attention. And um, even though it's a bigger pain in the butt, and I know some people don't want to do this, even though it's a bigger pain in the butt, you look at the other side of it and say, what's it worth to you? Is it worth you losing $10,000, $20,000, or is it worth just putting an extra hour or two every month just to make sure that you're going through it properly and that you're not getting screwed over by big companies who are, in my opinion, deliberately making mistakes or deliberately ignorant, I would say. Maybe is probably a better way to think about it. But anyway, that's just my opinion. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.